Okay, here we are back again on a Friday, March 10 at 10, and we got a little bit to cover. Some good things are happening. So housing market's getting stronger, job market's getting weaker, mortgage bonds are improving, and leading economic indicators are actually moving lower. So how are all these related? What do they all have in common? Well, it looks like things are turning around. So let's dive in. So inventory was up 1% month over month, 5%. 5.4% up year over year. Now there's 980,000 homes currently on the market right now, which represents about a 2.6 month supply. Now you really need to be at about a 4.6 month supply to be normal. Median home prices are up 2.2% month over month and 9% year over year. Home builder stocks have rallied as well. Entry-level home shoppers are likely to face bidding wars this spring, and we'll go into that as the reason why. Now, median home prices, they measure a mix of homes for sale. So even though the 980,000 homes that are in inventory right now that we have, and that's been the same number, guys, for the last 3 months, but that's compared to 4 million that were on the market inventory that we had in 2007. But of the 980,000, here's what's really important to understand. 400,000 of those homes, 40%, are already under contract. So that leaves only about 560,000 in true active listings, meaning if you got 400,000 that are under contract, and those are counted in the $980,000 of inventory, it's not like you can go up to someone's house and knock on the door and say, hey, I understand you're under contract, but we'd like to make an offer. They can't do that. They're under contract. So very, very important to understand. Now, there are also 65% of homes sold less in less than 30 days. Days on the market all the way down from 35% down to 29%. Homes are selling faster, is what it's meaning by that. 65% sold in less than 30 days, up from 57%. Now, here's a couple of cool things. First-time home buyers represented 28%, up from 27% last month. Cash buyers, 27%, down from 28% last month, and investors make up about 17%, down from 18% last month, which is about 1 out of every 6 transactions are with investors right now. Now, let's take a look at an article right now that is out there that you guys are likely to see, and it's with Redfin. And so the headline was home prices fell in March, the biggest annual drop in over a decade. But here's what's misleading with that, guys. Once again, this is median home price, the median home price. It's not appreciation. So what that means is that surely, you've got people that maybe are looking at buying a $600,000 house. Instead, they chose to buy a $550,000 house. So the median home price actually rose 3.6% in March, but down from the really tough to compare year over year from last year when it was just everything was just frozen and locked up after post-COVID. So new listings fell 23% year over year. This is the lowest level of on record. So the question is, where is the new supply going to come from? So we've got new listings down 23%. What does that mean for us in the real estate market, or maybe somebody that's buying? That means there's less supply. That means there's going to be more demand. There's less homes available for people to try to purchase. 44% of the homes had multiple offers. So we did a survey nationwide, said, hey, in your particular market, whether you're in Jersey, you're in Cali, you're in Denver, you're in Miami, hey, you're up in the Midwest, wherever you're at, what is going on in your market? Are you getting multiple offers? And 44% of homes had multiple offers. So as rates move lower, expect this to get even more exacerbated. So now there's 2 ways to look at the housing market. Housing activity is down. Of course, we see that rates almost tripled in a short period of time, and housing activity is really the driver of GDP, and it's clearly slowing. But some people confuse this with a housing crash. We talk about this a lot, like, is housing a bad investment? Well, no, it's not. Why? Because it appears that by all the metrics that we're seeing here, that things are starting to turn around, guys. So prices are going to be increasing, making it a good investment. If you own real estate, or if you get in now, you should see some increase in the value of your investment. Now, while housing is getting better, the economy, not so much. GDP is moving down, which means a recession is looming. The Fed, most of them, has finally admitted that, look, in the next 12 months, the second half of the year, we're probably going to be in a recession. Now, here's the silver lining to that. With the economy slowing, inflation is slowing. And as you've heard me say, mortgage rates follow inflation. So as inflation starts coming down, mortgage rates are going to start coming down. Okay. Jobless claims are up. Now, here's another last thing I want to go over with you guys is how are you marketing to your potential buyers? So those of you who are in the real estate realm, and that's who I'm talking to right now. And those of you who maybe need to hear this message because it's going to blow your mind. Recent survey that just went out, only 11% of people who surveyed believe that you can buy a home with 5% down or less. 11%. So that means 89% of people who were surveyed got it wrong and believe you need more than 5% down. 45% actually believe you need 20% down. So 45% of new home buyers out there, they're renters, think you need 20% down. Do you think there's education that needs to be told, that needs to be shared? Of course, we've got to get the message out. So you need to be telling people, hey, there are ways to get into the housing market where you don't have to save up so much. Now, let's take the median home price, for example, on that, like in the existing home sales report. So this is the existing home sales report, if I can say that word, existing home sales report I got at that time, is $375,000. Well, think about a 5% down payment, it's 19 grand. But if you're walking around thinking you need 20% down, that's $75,000. That's a major, major difference, guys. So get out, educate your clients. If you're hearing this message, and take note on that, reach out to your real estate professional, your favorite mortgage lender. If you need help, we can help you with that, get you pre-approved, get you a fully customized budget to understand what you need to do to get out there. You're going to have a letter in hand that says, hey, I'm ready to shop. I'm ready to go looking. You're going to have to be patient. There's less inventory. Don't get discouraged. You're going to have to make some offers and swing and miss on some. And remember, first-time buyers, your first home is not your forever home. Okay. So I'm looking at two different screens here. So I'm on Facebook Live, on IG Live. And those of you who are listening to this, remember, your first home, it's not your forever home. What does that mean? That just means that, look, the sooner you get on the housing train that you buy home, throughout history, you're going to have hiccups. Housing's going to go down a little bit, but over time, housing has gone up. If you look at a chart from left to right, it's just gone up. And so think about, what can I do? Maybe move out a little bit further. I get a lot of comments and things, and people are right in the middle of a heart of a big city, whether you're in San Diego or LA or Miami or something, and discouraged. And maybe that's just where you've lived your life. And I get that. Look, my first home was not in the heart of Nashville. It just wasn't. I couldn't do it. I'd moved out in the suburbs. I got a starter home, and that's where I got started and was eventually able to trade up and so forth. So that's all I got for today, guys. Have a great weekend. Reach out if you need anything. Shoot me a DM if you're on Instagram. If you're listening from Facebook, shoot me an instant message, and we'll be happy to help. Have a great weekend, and I'll talk to you soon.